Hi traders, Mandy here from tradingpsychology.com.au, coming to you all the way from Munich in Germany. So winter in Melbourne was really cold and rainy, and I wanted to visit my family anyway. And I have a few clients in Germany, Switzerland, and the UK that I can work with as well face to face. So I thought, come over and enjoy the beautiful weather. I mean, that's the beauty of our job, working in the financial markets. We can do that really from anywhere. Now, what I want to talk about today is the common challenge that traders face of cutting their profits short. And a trader a few weeks ago contacted me, sending me this email saying, I'm so frustrated. I had this epic trade set up and I got out far too early, left so much money on the table. Can you please help me figure out what is going on and resolve this? And I'm like, yeah, okay, really sounds very interesting. And I asked him to send me charts and explain to me what actually happened. So he sent me this chart and he called it a botched high of day breakout strategy. So you can see it's clearly a daily strategy. And his thinking was, we have this triangle here. If price breaches this horizontal line, which has been a previous area of support and resistance, and then retests that area, then he's looking for long with the areas of interest of target 1, the previous high here at 897, and target 2, the 61.8 fib, which is about $930 on this Tesla chart. So now you can see here on the second chart that he was actually trading off an hourly chart, even though it's a daily chart. It was a daily strategy, which I already thought is curious. Now, what was even more interesting is that he timed his entry on the 1 minute and the 5 minute. So his entry went quite well. He got in at 795, but then when price reached the previous high and then made a really big red candle, he lost his nerves and got out. I mean, look, it was still a really good profit, right? He got out at 822. You can't see the two here. So 822, he got out, like that's a solid profit. But remember, his areas of interest were something around the 900 mark. Now, you can imagine that he got very frustrated when price next, actually, let me show you what price did next. So a picture speaks 1,000 words, as they say, right? So you can see exactly how he planned it. It worked out, right? So Tesla breached that area, retested that horizontal line, and then skyrocketed into area of interest 1, the 897, which was the previous high, and also almost reached the area fib level 2, which was 936 then. So, he left $100 roundabout on the table, which would have translated into a several $1,000 trade, like an epic trade. So you can see why he was so frustrated. Now, the job we then had to do was to find out what was going on, why he behaved the way he behaved, and secondly, how to do better, what we can transform in his performance and also in his mindset to help him manage these trades much better. So as always, I look at 3 different areas: his mindset, his skill set, and if there's a market-driven context that he maybe missed. And what was becoming really apparent, which was my first question to him, was here you talk about a daily strategy, and yet you time your entry on a 1 and a 5 minute, and you manage your trade on an hourly. So that's a little bit of a gap for me, right? So when you have a daily strategy, you can't manage it on a smaller time frame because, of course, it's going to be quite volatile. And what showed us was really interesting that he has a little bit of a control issue mindset. So he likes controlling his environment. I mean, don't we all, right? We're all kind of control freaks. But sometimes in trading, it can be to an advantage, and sometimes it's to our disadvantage. In this case, it was working against him. And what that shows, how that plays out is that when he gets into fear and he's trying to control things around him, what he does is he goes from his big picture, which is a superpower, right? Like he's got this amazing mind where he can process a lot of information at the same time, and hence is able to trade many different instruments at the same time and also trade on a longer time frame. Now, he would then go into detail, like the funnel focus, and look at the smaller time frame. That was all he was capable of. His brain was literally shutting down. And so that's why he was starting to manage the trade on a smaller time frame, right? So completely driven by fear and fear of losing control in his case. Now, what also was apparent, what I mentioned before, was that he would time his entry at the 1 minute and 5 minute. Nothing wrong with it, right? That's awesome. But then after that, he needed to switch his mindset to the really big picture. Also, when I see a trader who's a big picture trader manage his trades or their trades on a smaller time frame, I wonder if there's a little bit of a scarcity thinking behind it. But it doesn't have to be, right? I would check for it. In his case, it wasn't. It was just he likes to nail his entries. So, rock on, go for it. And he does that really well. And by the way, he's also an amazing scalper. So he's got a lot of different skills. So the next insight we had was that, yes, he nailed his entry and he also nailed the areas of interest where to exit the trade, right? So the beginning and the end, but the part in the middle, that had a big weakness. So his trade management wasn't working well, and he needed to study and to learn how, the question is always for us, is what we are looking at so price went up and then it's starting to come off, is that going to be a turnaround back into the direction of the impulse, or is it just a retracement and making in a higher low and then continuing to the upside? So that's the conflict, and that was the part where he needed to practice his skill more, right? That was a skill problem in this case, not a mindset problem. So we covered this one. And then what was also very interesting, when I asked him to share his thoughts with me that he had whilst he decided to get out of the trade, he mentioned the Qs, right? The triple Qs, which are also indicative of the NASDAQ, which Tesla obviously is a big part of. And he said the Qs started to come off and becoming very soft. And that's why he thought, oh, I better go take my profits and run. I'll be happy with it. Of course, he wasn't. I mean, who was happy leaving a few $1,000s on the table when you can do so much better? And but when I looked at his trading plan, there was no mentioning of the Qs, right? So suddenly there was so many other influencing factors impacting his trade management that he hadn't considered when he was making his plan. So that was another part that was an area of improvement, right? So quite exciting that we found so many areas of improvement. And of course, what happened in the first 6 months, when you look at the chart, market came down, retracement, came down again, retracement, came down again, retracement. So a few times he started to go long far too early and he got taken out at a loss. And so he was already burnt a little and had, the fear of regret looming in front of him in his future, that if he doesn't take his profits and it would turn around, that, he would have the same experience that he had on the way down. So again, completely normal. It's just, if you want to be in the top 10% of traders, you can't do normal. You have to learn to deal with those situations in a very different way. So I just wanted to illustrate again what I just mentioned. So you can see price came down, was retesting the area here. I'm just looking for my annotate tool, but here we are, annotate. So was coming up. No, that's not it. Maybe that one. Oh, here we go. Nope, never mind. We do it without the annotate. So you can see price tried to come up, but then collapsed again. And so the first, I would say retest, or the first retracement, he got burned. And then he got burned here again. I mean, he made all the losses that he made here back again in that move down. But so you can see why he would have been very super conscious of not getting caught into getting caught in a trade where he thought it's going to go up, but price is going to collapse on him again. Yeah, so we can see how the past experiences really influence and impact our future decision-making process. So from there, when we had analyzed all his gaps and could figure out what it was specifically for him, for everyone would be something different, what the gaps were and where the areas of improvement were, we could then put together a performance improvement plan. And so in a nutshell, how to let his profits run, we need to work on his situational self-awareness. So at what point does he realize that fear kicks in, that stress kicks in, and teach him emotional regulation? Because I mean, stress is nothing but emotions, right? So when you learn to manage your emotions in the moment, you can learn to manage your behavior at the same time. And so helping him to really be conscious when his focus goes into detail, and help him to then have a strategy to help him bring that focus up again to the big picture, what really his superpower is. We changed his chart setup a little. We are still experimenting with it. I wanted to start for him looking only on 4-hour and daily timeframes maybe, but he still has this fear of transformation. So we have the 1 minute, 5 minute, 15, 30, 1 hour and 4 hour on the charts. And that works for him, right? So we want to transform him slowly, that he gets used to it. So we expand his boundary conditions of comfort slowly. So we expand his comfort. I don't want him to go outside of his comfort zone, because that's just more stress and it's really not necessary. Just expand it like a rubber band. So that's going to work, I think, really well for him. What his concern was really interesting. He said he is afraid that he can't perform on the higher time frame because he's so used to the lower time frame. And I gave him that example of Tiger Woods. So Tiger Woods had his clubs, and he was like such a great player all these years. And he got a new coach. The new coach said, look, let's try those new clubs, golf clubs, because they have a different material and that will help you to perform better. And Tiger Woods was very resistant at the beginning because, he loved his clubs. So he tried it anyway. And indeed, his performance went down a little. But after that, his performance went up and overtook where he was previously, because he got used to the clubs, he learned how to use them, and it actually brought out the best in him. And so I think that's going to happen to my trader here as well. We also needed to work on the skill strategy, so creating an exit strategy for the unexpected. And so how do you identify when it's a retracement versus a reversal, and giving him some tools in that area. And last but not least, adding market context to his methodology, where if he has thoughts like, oh, the Qs is turning around, he needs to have that in his trading plan. Right? He can't just ignore it. But the thing is, he wasn't consciously aware of that he had those thoughts. Only when he explained to me and when he remembered, he realized, oh my God, that's what I'm thinking. So again, bringing more self-awareness to the thoughts and all the other influencing factors that impact his trading. So I hope this is useful for you guys. And yeah, all the best. And remember, every successful trader has a dark past, and every losing trader has a bright future. On that note, happy trading.